Discuss this more is Klarna CEO Sebastian Siemiatkowski. Sebastian, good morning and thanks for being with us. You guys have emerged as one of the biggest players in the BNPL, the buy now, pay later market. So explain to us first a little bit how this business model works. You're actually taking on the risk for the consumer, who's ultimately left on the hook if the consumer can't or doesn't pay up.
Right. Well, I think that if the last decade was really been the disruption of retail, I think the upcoming decade is the disruption of retail banking and especially credit card industry, right? And the historical model of credit cards is that you let people revolve and you make money out of consumer interest. The buy now, pay later sector and the products that we offer actually allows consumer no interest fees, no charges for the consumer, and the merchants pay slightly more to offer a more attractive way of shopping online and in physical stores. And I think this is going to spell a major disruption to how this industry and credit cards have looked in the U.S.
Right. So, Sebastian, is it the merchants paying for that increased risk by the fees that they pay you, or are there bank intermediaries who take on some of that risk?
No, so we take the full fraud and the full credit risk for these transactions, but obviously merchants pay some fees for us offering these services. But they're also seeing a massive lift in AOV, in conversion rate, because consumers simply prefer these products to the traditional credit cards. And I think just look at the fact, recently it's been reported that credit card new signups are down 50% compared to last year. There's been over $100 billion of credit card debt paid down during the COVID crisis. So there's a major shift going on. And we see that in our numbers because we're growing now to 11 million users in the US. We have 50,000 downloads of our app on a daily basis. We've been even ahead of Amazon for a short period of time on the most downloaded shopping app in the US. It's quite exciting to see that shift. And obviously part of it is coming from Macy's and Etsy and Sephora and others promoting us on their website. But we're also seeing people simply download our app and shopping with us everywhere with no interest and fees for the consumers. So it's very attractive for the consumers to use these services. And I think it spells the disruption of retail banking. I think this decade is about it.
Sebastian, it's interesting. A firm also in this space, led by Max Levchin, just filed an S1 days ago. I'm curious your thoughts on what that does for buy now, pay later visibility in general, and also the mix of big box type names versus small businesses, which haven't been faring as well during this period. Right.
Well, I think that obviously this sector has already got some visibility because there are a couple of listed players in the Australian markets. We'll see how this plays out. We're happy that we're larger than the company you mentioned in number of users, and we're seeing a lot of traction in that. And they're also more famous for potentially doing kind of interest-bearing products, which are more kind of traditional point-of-sale financing, while the buy now, pay later is more about offering consumers products that are free of interest.
Shepard Smith here. Thanks for watching CNBC on YouTube.